Khemani joins us now. Vikas, good morning. Thank you for joining us. Both of us know that the impact of state elections would be very limited and it will not be very large. But from a market standpoint, Karnataka elections could be an important indicator of what lies ahead in 2019. So from a market standpoint, what is the importance of Karnataka elections?
I think any indication or any outcome which kind of takes the hypothesis towards continuation of the same government in 2019, market would like it, and that is what seems to be happening. I think in last couple of days, the trend was more or less kind of clear or in line with the exit polls that BJP will get a little bit more edge, and you might get BJP-led government in support with JDS or somebody. So I think any hypothesis right now which supports that NDA government will come back, I think market will like it, and anything which is contrary to that, you will see markets kind of correcting and not liking it. So I think this is a very simple thing, and currently it looks like that we are heading in direction where you won't get a negative surprise. You will be more or less okay with this, and I think with this event behind, again focus will shift back to macros, to the earnings, to impact of oil price, to inflation, interest rates. I think we'll come back to those issues and maybe start revisiting state election when the Rajasthan and Madhya Pradesh goes back. So I think, in my opinion, tomorrow, by tomorrow, and once the results are out in a couple of days, I think this impact of this, I don't think this is going to materially change direction of the market unless we see some sort of major wiping out of the BJP from the state, which is again unlikely to happen.
Right, but Vikas, even so, it's not just about one state now, it's really about what the market does from here on to, same time next year in the countdown to the general elections. And, this was a point I was making earlier on. If you look at the 2014 elections, the move in the markets actually started almost around December 2013. By the time we actually moved into the election outcome and the appointment of the new government, the market had already rallied considerably. So the market will start pricing in what it feels could be the outcome of the general elections, plus the BJP's position or ability to hold back its ground in advance. So to that extent, how do you think the direction of the market would be at this juncture? What do you think the market would take away from these state elections in inferring what this means for the BJP at the national level?
I think it's an important point, and I think as you rightly said, that markets tend to make hypotheses, tends to pick up the trends early on based on how the likely outcome is going to be. And 2014 happened a similar way, but the only thing I would say, the difference to be kept in mind, that in 2014, just a year before the election, we came out of a complete gloom doom environment. Markets did terribly, in that period, and any hope of change and market, the momentum was kind of building on that. So I think that and trends kind of started becoming reasonably all right, that NDA will come to the power, but nobody expected the kind of the majority. So to that extent there was a surprise, but I think early on there was kind of trend building on, hence market factored in. So as we move towards general election in 2019, if the indication starts coming in that this government will come back, plus whatever is the number of seats, but as long as the government is going to come back with a reasonably good amount of say and majority, I think markets will start kind of comforting themselves, and you might see some sort of continuity of the rally. And I think good part is that I am hoping that even the earnings will support in this period, because the economic uptick has started happening. So if we see a comforting of economic uptick as well as some sort of favorable trend towards continuation of the same government, markets will start definitely factoring that in. And in that sense, I think probably Rajasthan and Madhya Pradesh state election might play somewhat crucial role in terms of determining that comforting or direction of the political outcome.
Yes, but do you worry that from now up until 2019, policy making would take a back seat? And if there is indeed anything that moves on the policy front, that will have a rather populist tone? Because just this morning, we've got IOC hiking fuel prices, and we're already talking about as to how it's not going to be exaggerated. It will not manage to match up to the crude uptick of $77 to a barrel, because it is state election year. You've got 3 more state elections, the big one 2019. OMCs will have their hand tied. Similarly, with the government government have a very populist tone to their policy making?
Absolutely, and I think you will have to wait and watch on that. But I think, see, typically, these are the situations you will see every year, 1 year before the election. Always these kind of things happen. So, I don't believe that this government will materially change their economic stance or the way they are going to manage economy from a medium term to long term perspective. Political rhetorics and making noise are one part, and secondly, changing and them in reality and implementing them structurally is a completely different aspect. So I think markets probably might get a little bit up and down on volatile based on those rhetorics, but I do believe that this government is not going to kind of dilute too much on the fiscal discipline path which they have started on, some of the structural reforms they have started on, whether it was GST or any of those big ones. So I don't think they are going to materially shift on that. And good part is that I think all those pains of those structural reforms seem to be behind, and we are beginning to see some sort of economic uptick. The amount of the amount of money which is being spent on public infrastructure, I think started beginning to reflect on the ground. We are seeing private capex picking up. So all those things are positive signs, and I think in my opinion, as long as there will be political rhetorics which can unnerve market, but I think market will have to kind of overlook some of them, and that's where in election year markets will always be volatile, but and that is what we'll have to deal with it. But I do not see over even next 12 months market materially changing the direction on the negative side. You will see volatile sideways to positively inclined market.
Because let's look at the market setup. Crude at $75, bond yields at 7.7%, US 10-year paper at 3%. Earnings not great, but okay. I mean, this is not like a great quarter of earnings so far. I can argue one good numbers, two bad numbers. You can argue about two good numbers, but one bad number. So the lay of the land is shaky, but markets are strong, markets are firm, and we are not even 3% away from a record all-time high. So why are markets showing so much of internal strength?
So again, Nikunj, if you go back, I think this year we have lots of micros improving and macro headwinds are definitely there. Exactly opposite setup was there last year when we had strong macros and micros were not improving. So I think this convergence happens, and it happens in its own way. Market has its own way of doing that. So and if you look at do I worry about oil being at $75 plus? Answer is yes. Will it have impact on the economy? Answer is very much yes. But I think what will be there is going to be tug of war between the economy picking up due to spend on the infrastructure, private capex, demand uptick. That will push economy in one direction. Some of these macro factors, interest rates will push economy, have an impact on the other direction. And this tug of war will kind of keep on driving markets up and down. And that's the reason you are not seeing market getting material direction. The underlying strength of the market is strong, which indicates that the long-term faith in the market is there. Whenever correction happens, you start seeing, buying coming through. I think this also indicates that the long-term faith in economic growth, earnings growth is there. Also, long-term faith that oil may not sustain here for long, is also there. So I think if you ask me, these are a couple of mixed factors, and that's the reason markets are right now holding on. And I would not be again betting for a significant correction in the market. Correction would happen. At the same time, I would also not be betting that market will deliver some significant return from here on throughout this year. So this year is going to be year of this sort of pull and pushes, and we will have to navigate through this interesting times this year and maybe early part of next year.
All right, Vikas, we'll leave it at that. Thanks very much for taking out the time to speak.